What are passive funds and should one invest in them? The rationale and the method.
So we talked about alpha and beta, right? So the two components. Those are characteristics of an actively managed fund. In the passive fund, this what simply does is that it invests, okay, into, say, for example, and it mimics a particular index, right? So if you are having a ETF, normally they are called ETF, exchange traded funds, or they could be index funds. There are two ways, okay, wherein you can participate into passive funds. So it's the index funds or an ETF. So if it's the Nifty ETF or Nifty index, right, which is a passive fund, it will invest, it will exactly mirror the Nifty, okay, weightages of the stocks which are there in the Nifty. There's 50 stocks in the Nifty. Each stock has a particular weightage in that index. That same will be replicated in that fund. And there's a rebalancing which happens on a daily basis, right? And depending on the inflow and outflow, in such a way that the weightages remain aligned to the benchmark weights. So what it does, it mimics the return of the index at all points in time. And since it's a passive fund, there is no active involvement which is there, right? So there's not kind of a fund management skill involved. It's more doing the allocation, and there are platforms. It's more nowadays there is a lot of technology which is done which can do it automatically, the rebalancing over there. The expense ratio is also much lower there, right? Because and so to that extent, the return of that fund is almost equal. Even post expense ratio is also very low. So it's almost equal to the return of that particular index. And the way to measure the fund performance for active is the tracking error. Okay, it's again a concept which is there, which measure how much deviation, okay, has been there vis-a-vis the benchmark return. And normally, lower the tracking error, that the better that fund is, right, in terms of mimicking that benchmark. So that's the concept of a passive fund. Now, investors, whether they should look at passive funds, yeah, they can look at passive fund also along with active funds. Normally, I would say that when you want to increase your exposure, right, say in a particular fund or a particular category of fund, and take market-wide exposure, right, then in a short time frame, without actually bothering and deciding which fund to invest, right, then I think you can go through the ETF route because you will get the market-wide exposure. But over a longer term, right, if you have a long-term money, then I think traditionally what we have seen that actively managed funds over a longer term have given a slightly better return. I mean, arguably now the return differential has come down. Okay, the alpha, right, we talked about, which active has come down, but I think there is still scope to generate alpha in Indian markets. We've seen global market is very tough. A lot of the active fund managers are underperforming the benchmark. So there's a lot of more movement towards passives over there. But in India, there are various category of funds which are there, right? Like small cap, mid cap, thematic funds, where the alpha generation can still be better. So I would say there could be some to take a market-wide exposure just to play the market. Okay, one can use the passive funds or the ETFs. But for long-term wealth creation, I think it would be better to put into an actively managed fund, because even if you get at 1%, 2% extra return, that impact extra over a longer-term period can make a significant delta to your portfolio. Or other way, that if you want undecided, you want to quickly participate in the market today, right? You undecided, then you can in the short term put into a passive fund and then later on reallocate that. Okay, once you are sure, okay, where you really want to put that within that particular category, you can do that later into the actively managed funds. So I think, yeah, there is merit to have some exposure to the passive funds along with the active funds in investor portfolios.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.